Hi guys, and welcome back to my channel. I missed you guys. I know I've been gone for a while, but your girl is back. If you are new here to this channel, this is the channel where I'm Mel. I like to talk money, money mindset, investing, trading, really anything surrounding your finances and how to make your money work for you. This is probably the channel for you. So go ahead and like, subscribe. Please share my videos and my channel with a friend, whether it be on social media, text, whatever your route is to deliver or push content out. Go ahead and do that, okay? So I want to address the elephant in the room, the elephant being the stock market, right? So we know tariffs are going on. There's trade wars happening. A lot of people really don't know what to do. They don't know if they should sell everything, if they should buy everything, if they should sit on the sidelines. Well, this video is kind of for you. I'm going to show you how to capitalize on a down market, okay? So if you are interested in possibly making money while the market is actually going down, go ahead, stay tuned, okay? All right, so should you buy, should you sell? Really, the first question that you have to ask yourself when the market is going down is, what is my goal? Are you an investor on one hand, or are you a trader on the other hand? Okay, so for the purposes of this video, I'm going to be showing you more of the trader side, but I want to speak to the investor. So if you are the person who you're not really into trading yet, maybe you just want to buy stocks, hold stocks. One thing that I always preach, and any person who is big in the stock market will teach, Warren Buffett favorite line is, be fearful when others are greedy and be greedy when others are fearful. Okay, so by that I mean times like this makes most people panic. I have received calls from people saying that they feel like they should just get out of the market completely and at a loss. So what I will say to this is, like I've preached in previous videos, and if you missed those videos, especially the one on index fund investing, I'll put it in the description box below. But this is why it is so important for you to understand what you own, okay? So if you buy a stock and you have no idea how it's performing as far as, is it profitable, is revenues increasing, are the bottom line, are they actually making money, are they a profitable company? If you don't understand what you own when you bought it, more than likely, when you see the stock market dropping, you're going to be more likely to sell, because when you bought it, you never understood what you owned in the first place. Versus if you were to do a little research, and by research, I mean, like I mentioned in those previous videos, maybe going on to Yahoo Finance or CNBC Money, or even just the investor relations tab of the actual company that you own, which is at the bottom normally of any company, any public company that's trading on the stock market. They have an investor relations page, okay? And seeing, you know, are they increasing their revenue? Are their margins good? Are they a cash flowing company? If you understand that, when the market pulls back, you then know, okay, this is a time where the money that I have put, I'm gonna go ahead, I'm gonna possibly average down a little bit. So by averaging down, I mean, when the market pulls back, maybe you bought it at, let's just say if the stock price was at $100 and the market is, the stock price is now down to $90 because the market has sold off some, you understand what you own, and you understand that you could possibly be getting that stock at a discount now. So instead of selling it and taking a loss, you are going to possibly make even more money now, because you're going to buy more when the market is down. So you make your money in down markets. Long story short, if you are an investor, right? But I'm gonna stick to the trader side of this video, because that's mostly what I do. I do invest, but I am an active trader. So there are two things you can do if you are an active trader. Oh, this is what I will say. It's more than two things, honestly, that you can do, but I'm gonna focus on two things for the purposes of this video. Okay, so the two things that I have been doing while the market has been going down, if you know me, you know I'm either going to take a short position or I am going to buy puts, right? Okay, so first things first, let's get into what is shorting. Really, both of them, buying, going short or buying puts, you are making money as the stock price goes down. So let me explain this concept to you, okay? So in my hand right here, I have Beat headphones, right? Okay, so let's just say I decided that I was going to lend these Beat headphones to my cousin Pookie. Pookie has my headphones while I went out of town. He said he wanted to go to the gym, yada yada yada. Okay, so now what Pookie decides to do is he wants to make a quick flip. So he sells my headphones on Amazon for, let's just say, $1,000. Okay, so he sold my headphones. He pocketed $1,000 from the seller. So he is first, he's first borrowing my headphones from me. So in short, you are borrowing shares, right? And then you are selling them at a higher price in hopes to buy them back at a lower price. Okay, so he has the headphones that he borrowed. He sold them on the market on Amazon for $1,000. So he has $1,000 in my pocket. But when I come back in town, I'm going to want my headphones back, right? So what Pookie decides to do, he gets a little smart, right? So he goes to Temu and he finds those exact same headphones, hopefully. And he decides that he's going to find them at a cheaper price. So he finds the headphones, he spends $500 on the headphones. So now he has $500 because 1,000 minus 500 is 500. And he also has my headphones. So here I come back in town. I'm pulling up on Monday. I'm like, okay, Pookie, I'm back in town. I'm going to the gym tomorrow. I need my headphones. So he then gives me my headphones back, but he also has $1,000. I pray that made sense. So once again, you're borrowing shares in this case being headphones. You are selling them at a higher price, selling them on Amazon in this case for $1,000 in hopes to buy them back at a lower price and give me all of my stuff back, which is my Beats headphones. Okay, so that's the pretty much how shorting works. So I hope that made sense to you. I know a lot of people have heard the phrase shorting, but you don't really understand how it works. But just know you are borrowing shares. So one thing I do want to mention, if you are trying to short, you're gonna have to have a margin account. Okay, so because you're borrowing the shares, you can't do this in a cash account. You have to have a margin account. And any brokerage, they usually offer a margin account. Most, the minimum requirement is $2,000. Okay, so that's option number one. Option number two you can buy puts. Okay, so if you missed my options video, that sucks, but you can go back and you can watch it. I'm going to link it down in the description box. It was Option Traders for Beginners. It was where I had made a ton of money off NVIDIA calls. I was buying out of the money calls, but yeah, so if you missed it, go ahead and, check that out. But what a put is you make money as the market goes down. Okay, so think about it like this. If you want to make money if the market is going up, you will buy a call option. If you want to make money as the market is going down, you will buy a put option. Okay, so think call up, put down. Call up, put down. Call up, put down. Okay, repetition. That's how I get stuff to stick. So that's why I'm pushing it out to you like that. So those are the two ways that you can make money in a down market. So let's get into a way that I capitalize off this. I put in, of course, the thumbnail about how I did 400% on some put options. And this put option was on AMD. This was it was a small little play, but it was 400% of my money in like 3 days. Okay, so let's get into the chart. I'm going to show you exactly how I made this play. Okay, quick correction. I think I mentioned that Pookie made $1,000, but Pookie actually made $500 because he sold them for $1,000 initially, and then he bought them back for $500, which means he pocketed $500. Okay, so I did want to correct that because I didn't want to confuse anybody. So yeah, let's get into the chart. Okay, so one of the things that I wanted to make sure to start doing is I wanted to show you my technical analysis and how I go about getting in and getting out of trades. That's some of the feedback that I have received in previous videos as to, my thought process. What am I doing? If I'm using any indicators, if any. Really, I use buyers and sellers levels, and then I will look at like RSI. Volume is something that I use, but I'm not a big indicator girl. I'm just kind of looking at where the big money is going. Okay, so in this case, AMD, same thing, looking at where sellers are sellers and buyers are buying. So as you can see up here, I have the top two zone, or the top zone, which is up here, is where people where I charted people were selling, and down here at the time is where the buyers were buying. Okay, so in the shorting position, so I took a short position. Oh, I actually bought a put option on this. Okay, and so it was an out of the money put. And so this is one thing I want to mention. You can absolutely make money on out of the money options. Okay, you look at the delta. If you missed my option Greeks, please check that out. I'll link that as well. But one thing the delta will tell you is how much money you make every time the stock price moves up or down, however which way, if you're on the call side or the put side. Okay, so that's how you can make money. But one thing I do want to mention, if you are buying out of the money options, one thing to have on your side, you need to have time. That's what I have been good at. If I do make money, if I do buy out of the money options, I will try to focus on ones that have longer expirations. Okay, and that's just to give your option or your stock time to move in your favor, so you can eventually be in the money. And you don't actually have to be in the money at the time of taking profit to make money. Okay, so I do want to say that. Okay, so this particular option here, so I was up here, you can see where people were buying a little. Then you see there's 3 basing candles to the side. Indecision candles is what some people like to call them. And then here there was a sell-off, and then there was a repeated sell-off, and then we're kind of coming back around. So I charted this before. So I actually got into this position on March the 26th. So here on this candle right here, so as I saw that there was selling pressure and it hit my zone and it's starting to come out, I bought a put option on this. So I bought a 101, that was a strike price. As you can see, once again, this was out of the money because my price of AMD at that time was around about 100, it was a little under $115. So I got in, the option cost me $100, like $109, right? So as I'm getting in, you can see that the price is starting to go out. It's coming down. It even gapped down that next day, and then it's still coming down. And I had this charted. So this was my buyers, where people were buying. Price kind of came down here, and then it started going back up. And so here on March the 31st, and I will put the screenshots in so you can see my buy field and my sell field, so you can know that I am absolutely, this is what I did. And on March 31st, when it hit my level here, I got out of the position. It kept going down, but this is how you make money. Okay, one thing I will say is take profits when you stick to your plan, basically. So if you say you're going to take profit at this level, take profit, and it's always another opportunity to trade. Just always remember that. That's one of those trading psychology things that not only did I have to get used to, but a lot of people have to get used to be a profitable trader. So this was a good trade. I made like, I think $400 and something. I can't remember exactly how much it was, but it was a really good trade. Yeah, so I stuck to what I said I was going to do. I got out when I said I was going to get out. And yeah, I made my money and I got out of the game. Okay. So I did want to show you that, the technical side of what I did and how you can absolutely make money in a down market. Okay. So I do want to discuss some disclaimers with you, especially when it comes to shorting shares. Okay. Quick disclaimer: shorting shares of a company can be very, very, very risky. And this is why. Okay, so if you buy shares of a company, if you just say, I'm going to buy 10 shares of Apple stock, you're only going to lose what you paid for that particular purchase. So if it costs you $1,000 to own 10 shares of a company, you're only going to lose $1,000. That's your max loss. Okay. But with shorting a company, your max loss is infinite, right? Because like how I mentioned to you in the Beats headphone scenario, you are borrowing these shares and you're selling them at a higher price in hopes to buying them back at a lower price. But what if the price just keeps going up and up and up and up? Your loss is infinite, right? So I just want you guys to be very mindful of that. One thing that I do like to do if I'm afraid of that happening is I would just short the shares, because one thing about, I would just buy put options, because one thing about put options is whatever you pay for the contracts, that is your max loss. So I just want to put that out there. So don't say I didn't tell you. Shorting is very risky. Investing is risky in itself. So once again, just know that, and anything I'm saying in this video anyway is just for educational purposes. But yeah, so just keep that in mind before you just jump off and start shorting the market. One thing you can do too is to kind of get used to this. I know this may be a new concept for a lot of people, is you could go to the sim side, the simulation side of your trading platform, and just, you know, dabble in with paper money for a little while, see how it feels to short. And so when you're opening up a short position, you are going to sell. You're not going to be buying, you're actually selling them. Okay, so just remember that. And then when you open up an option chain to buy put options, you are going to go to the put side of things. And remember, if you're buying options, you're always going to be on the blue column. You're not on the red column, because you're not selling. We're not talking about selling in this video. We're talking about buying options. Okay, but if selling is something that you maybe are getting into, you want to learn about, put it in the description box below. Put selling options, comment selling options down below, and maybe we can talk about that in a later video. But I did want to just give you guys that disclaimer about shorting the market. Just be very careful if you do decide to take that route. Okay, all right guys, thank you for tuning in to another video. Thank you guys for watching. Go ahead, please like, subscribe, share this video with family, friends, because it is a once-in-a-lifetime opportunity that is going on right now with the stock market. People make their money in down markets, like I mentioned in the video, at the beginning of the video. So yeah, like, go ahead and shop this out. Let everybody know, spread the news. I am here to teach and hopefully spark your mind as far as investing your money and benefiting off this market pullback. Okay, so once again guys, thank you for watching, and I'll see you soon in the next video.